Super Mario had already shown up to one press conference this week, so perhaps it was too much to expect a second. The Nintendo original stole the show at Apple's new product launch, so instead it was plain old Mario Draghi who turned up to brief markets on the European Central Bank's latest monetary policy thinking. There was no sign of the Super Mario, who has turbocharged bond markets with ever more exotic varieties of quantitative easing and negative interest rates. It's not just European investors who hang on every word in Mr. Draghi's press conferences. Plenty around the world came away disappointed when the ECB president punted on whether QE will be extended beyond next March or widened to include a broader range of potential bond purchases. US fixed income markets are now acutely sensitive to pronouncements and rumours from the ECB and from the Bank of Japan too. Investors are playing in an ever shallower pool of bonds that offer decent yields, and so they're looking all around the world for income. After Mr. Draghi's non-announcement, at the end of the European trading day, the yield on the 10-year Treasury was up by the same amount, 5 basis points, as the yield on the German Bund. Meanwhile, as Japan's government bond yields have risen over the past couple of months, to the point that the 10-year is only 3 basis points negative now, Japanese investors have sold US Treasuries and turned to long-dated local issues. The government sold a new 30-year bond this week to surprisingly strong local demand. So the threat of waning international demand has kept US yields up, even as the odds of a September rate increase by the Federal Reserve have lengthened. US Treasury bulls, who are betting on yields going back lower, face a couple of hurdles. Will the Bank of Japan, at its meeting later this month, exhibit cold feet on negative interest rates, for example? And has Mr. Draghi really only delayed the announcement of more bond buying, as the market currently thinks? Or might the ECB switch policy, perhaps to adding equities? Anything that further raises yields in Europe or Japan threatens to do the same in the US. It's not just iPhone users who'll be happy to see Super Mario back on their screens.